Ladies and gentlemen, are you ready for a beast banger of a video here today, folks? I got one for you today. Okay, so public count, back-to-back very good days. We're back rolling the public count, up $23,000 here today, coming off of a $92,000 gain yesterday. So public count definitely up and rolling. I posted this on my X page. You ever want to follow me on X, I always have that linked in the description area of all my videos. I posted this. I said AMD could go to $300 to $400 within the next 4 months. If you understand how fast a hype cycle can go and how insane it can be. NVIDIA came out with banger earnings, ladies and gentlemen, and yet it's a yawn situation. The stock's hardly moving. Salesforce, they hate it. They hate this stock so much. They just can't stand it. Stock down after their earnings just came out. Trade Desk getting absolutely pummeled, down to $20 a share. This stock was $90 just a few months ago, ladies and gentlemen. Ouchie, what's going on there? Their earnings have come out. Snowflake, that stock is down after hours. That was a $275 stock just back on Halloween. And ever since then, it's been scary. It's been a horror movie. C3AI, speaking about horror movies, oh my gosh. This is a stock they were comparing to Palantir just a few years ago. Check out this stock back in 2023. It was $36 a share. It's $8 after hours. Stock's getting pummeled. Their earnings just came out. Honest, my favorite $2 Chuck just came out with their earnings. It's still a $2 Chuck even after these earnings. Okay, in this video here today, folks, we got a lot to get into. This is a beast. First up, NVIDIA. Second, Salesforce. Third, Snowflake. Fourth, Trade Desk. Fifth, C3AI. Six, Honest, and then the seventh subject we'll get into in this video here today is a great hidden small cap banger of a stock. Their earnings came out yesterday. No one else talks about this stock other than me. I've over doubled my money on this stock, and I think the next double is coming up here over the next, we can call it year or so. And I want to share that stock with you guys in this video here today and why I'm so excited and the numbers behind it. Because this isn't just like, oh, just talk. Like, this is numbers behind this company, okay? And their numbers are blowing up, okay? I appreciate y'all for joining me. There's one thing and one thing all I need from you guys is a sign in my garage right here. It says hit the subscribe button and smash the like button. That sign's in my garage. I'm going to move it to the new house when we move to the new house. That's all I need from you guys. If you could please just hit that little like button. Make sure to subscribe to the channel. I do appreciate it. Pinned comment down there today if you want to join my private stock group, my private wealth group, all those sorts of things. Join us with the 6-figure, 7-figure, 8-figure members. That will be the pinned comment down there. Access to all of my premium course curriculum so you can learn everything about this game inside and out. Access to 1000xstocks.com, access to the Discord chat, exclusive weekly videos. I just recorded the private group video yesterday, or actually it was 2 days ago. So all that good stuff, okay? Listen. NVIDIA did exactly what I thought they would do. And if you watch the channel, you kind of know my opinion on this. I thought they would beat earnings, but I thought their guidance was going to be a banger, right? And this is exactly what they did. They beat earnings. It wasn't like a shock and awe when it came to their earnings for last quarter, but it was a shock and awe when it came to their guidance, right? EPS came in $1.62 versus $1.53 was expected. Revenue came in at $68 billion versus $66 billion was expected. Very solid beats for the company, but the shock and awe came where the guidance was at. And that's what I kind of thought was going to happen here with NVIDIA. Guidance, much better than expected. NVIDIA said revenue for the first quarter is going to come in at $78 billion plus or minus 2%. Analysts were expecting $72 billion. That's a pretty darn shock and awe, man. That's about as good as it gets. Look at this. The second A++ grade of an income statement. Wow. Of this earnings season, right? Palantir got one, NVIDIA got the other one. Oh my gosh. Revenue up 73% year over year. Cost of revenue up 60%. That's great. Like if your revenue is up 73%, your cost of revenue is up 60%, you're winning. Gross profit was up 78% year over year. $51 billion in a 3-month span for gross profit. You got to be flipping my flapjacks. Research and development was up 48% year over year for the company, which is a very doable number when your revenue is increasing 73%. Now, if revenue all of a sudden goes down to, let's say, 20%, right, 25%, and your R&D still growing at a 50% clip, then we got an issue, right? But for right now, it's all good. Sales general administrative, SG&A, was up 32% for the company year over year. Once again, your revenue is growing 73%, 32%. SG&A growth is nothing. Total operating expenses up 45% for the company year over year. Gross profit is up 78%. So guess what's going to happen to your operating income? It's going to fly. 84% growth in operating income year over year to $44 billion from $24 billion. Oh my gosh. Then they had this other income here, 665% year over year there. Okay, so total other income was up 415% year over year. Income before income taxes up a whopping 100% year over year to $50 billion from $25 billion the same quarter last year. Oh my gosh. Net income up 95% year over year. Diluted EPS up 98% year over year. Oh my gosh. You gotta be kidding me. $1.76 versus 89 cents. Unbelievable. A++. That's as good as it gets, man. That's as good as it gets. Put it in the history books. But what the heck's going on with the stock price? The shock and awe guidance, an A++ quarter, and yet the stock price is stuck. So what's going on here? Well, let me explain. If you remember, I think it was the last year or the year before, I made a prediction that basically NVIDIA is going to be stuck between 125 and 200 for years, right? 200-ish range, right? And kind of just like Palantir. And the reason being is we have a situation here with NVIDIA where everybody and their grandma knows the numbers are great and they're going to remain great, you know? But we are of the understanding growth rates are about to decrease quite rapidly as we tick on here over the next 1 to 2 years, right? So these shock and awe, like 70% growth rates, they do have to come to an end. Why do they have to come to an end? Because companies don't have there's a few reasons for this. One is companies don't have a lot of range to keep just going crazy with CapEx over the next few years. Like that's just mathematics. Look at what Amazon just posted for what their CapEx number. Dude, they don't have room to then go blow that CapEx up to 300 or 400 billion next year. They just don't, they can't do it unless they want to just absolutely load the balance sheet with debt, which they're not going to do, right? Meta, Google, all these companies, they don't have the room to go crazy with CapEx in 2027 and 2028. So if they increase, it's going to be very modest, which makes NVIDIA's growth, guess what? Very modest. But that's not the only issue. They got this woman right here. This is a big issue for NVIDIA. NVIDIA, for the last several years, has not had to worry about any competitors. They haven't had to worry about anybody eating into their market share. They haven't had to worry about anybody else eating into their margins or anything like that. Those days, ladies and gentlemen, starting 3 months from now, are over. This woman right here is a huge issue for NVIDIA over the next 2 or 3 years. And the reason being is AMD's revenues are about to explode, okay? Because of the 450 series, and then obviously we'll go into the 500 series after that, right? And what's going to happen here is, guess what? The companies that are increasing their CapEx after this year, Amazon, Meta, Google, and even a big portion of it for the back half of the year is going to start going to AMD's pockets. There's no such thing as a free lunch. AMD's revenues going insane doesn't just magically come out of thin air. That's extra money that NVIDIA could be getting, right? And now AMD is going to be getting that money. And so what ends up happening is not a situation where NVIDIA's revenues start to go down, because it's not a situation where like everybody's flatlines their CapEx after this year, although if that happens, NVIDIA's revenues will literally go down because AMD is going to eat market share regardless of what happens over the next few years, right? But it's just like the CapEx increases are going to be much, much more mundane for Amazon, for Meta, for Google, all these companies 2027 and past, because it's just math. Like they just don't have the room to go crazy with it, right? And double up their CapEx again or go up 50% again, right? And so AMD is going to eat a lot of NVIDIA's money they could be getting essentially over the next few years. And we've seen this in the stock price, right? It's not like I'm the only person that's kind of figured this out. The market's figured this out. This is since those April 2025 lows. Remember, prior to this, NVIDIA smashed AMD stock. It wasn't even close, right? But last year began the upcycle of where AMD significantly outperforms NVIDIA over a multi-year trend, essentially, right? And it already started. So since those April lows, AMD stocks up about 170%, NVIDIA stocks up about 103%. So both have done well, but obviously AMD's, and this outperformance, ladies and gentlemen, is about to get much more extreme. And NVIDIA's caught in a very, very tough position, okay? And then we'll move on to Salesforce and these other subjects. Let me explain this because this also matters for AMD investors out there to understand this. NVIDIA's in a pickle. What do? AMD is about to start stealing away a lot of revenue from you. So you're either in a situation where you let them, right? And it just is what it is, or you try to fight them off and lower your prices substantially to try to undercut them, which then your margins are wrecked. So then all of a sudden, it looks like you don't have pricing power anymore. And you go from commanding these insane margins, and NVIDIA's been commanding the last several years, to, I don't want to say bad margins, but not very good margins, right? Because we know AMD's undercutting on price, and they're giving strategic relationships where companies are going to get ownership in the company as long as they fulfill these commitments, like Meta, like OpenAI, right? So NVIDIA's in a tough position. The company's a beast. Their products are great. We all know that. There's a reason this company's near a $5 trillion market cap. But everybody's starting to realize, crap, man, these growth rates are going to start becoming a lot more mundane. They finally are about to have competition starting 3 months from now. And that makes you into a weird situation. That's why no one's willing to buy NVIDIA. They came out with a shock and awe, and at the end of the day, what's the stock got to show for it? They came out with perfection earnings. Perfection. And what does the stock have to show for it? That just shows you investors like, dude, like, yeah, it's so great, but we know what's coming here, right? We know what's coming. Next up here, Salesforce. Then we'll get a Snowflake, Trade Desk, C3AI, Honest, and a great small cap banger of a stock. Okay, Salesforce. Their earnings per share came in at $3.81 adjusted, keep that in mind, versus $3.04 was expected. Revenue came in at barely beat expected numbers here, so not a super exciting like numbers from Salesforce here, right? As far as guidance went, guidance for the first quarter included $3.11 to $3.13 adjusted EPS on $11.03 billion to $11.08 billion. Analysts surveyed expected $3 of EPS, so slight beat there, and expected a guide of $10.99 billion, so slight beat there. For the full year, Salesforce called for let's call it $13.15 billion of revenue, or excuse me, $13.15 EPS roughly, right? Analysts were at $13.12. It's not a big difference, right? As far as revenue went, basically Salesforce is around $46 billion in revenue expected. That's right where the guidance was. It was right where, kind of like analysts were expecting. So we got sleepy guides, sleepy beats, and that's just not going to cut it for a stock that people are scared right now. Let's just call it what it is. You can't come in with sleepy guides and sleepy beats when, Wall Street's scared. They're frightened right now, right? I'll put it to you like this. You got a little kid. Little kid wakes up. They had a nightmare, right? They need more than just, it's okay, go back to sleep. It was just a dream, right? Sometimes a little kid, you got to walk them back to their room, hold their hand, got to lay in bed with them for a bit, put on the night light, right? Make them feel comfortable. That's what you need to do, what Salesforce needed to do. And by Salesforce not coming in and smashing anything, they didn't come in and smash guidance. They didn't come in and smash last quarter's numbers. It's just kind of like, it's there. Maybe slight beats. That's not going to make Wall Street comfortable. Wall Street's very uncomfortable right now. Investors are very uncomfortable, and so that's why that stock sold off. And this was a situation where this stock was primed to move up big on these earnings. But you put out very small beats, and people are like, no, we're still scared, so we can't buy this. If anything, we sell it off, right? Now, you want some good news? I do have some good news for you here, okay? Listen. Salesforce is seeing benefit from its stake in Anthropic. If you didn't know, Salesforce is part owner of Anthropic, generating an $811 million gain on strategic investments in the quarter. That's up from $96 million in a year ago quarter. This is Benioff talking here. He says, I think we just put another $100 million into the new round. We're at about $330 million into Anthropic as far as invested money. It's almost 1% of Anthropic. So they own about 1% of Anthropic, which, if you think Anthropic's on its way to becoming a $1 trillion valuation long term, well, shoot, there's $10 billion there. So, but we'll see where Anthropic valuation goes long term, but there's some thinking it's on its way to becoming a $1 trillion type valuation, right? Well, we'll see about that. Even if it's a $500 billion valuation long term, well, shoot, you still got $5 billion there, right? Benioff basically said he wished he had more invested here, right? Now, Salesforce also doing a big buyback. They're talking about like a $50 billion buyback, like an insane number, which, the market cap as of tomorrow should likely be 170 to 180 billion. So you come in with a $50 billion buyback, that's extreme. That's an extreme sized buyback there. So My opinion is if Benioff is very confident in his company's growth and where it's going, right? And by the way, Agent Force growth looked phenomenal in the quarter. That business continues to grow rapidly, which is what we need to continue to see, right? If Benioff's really that confident in the company for the next 10 years, do the $50 billion buyback. It makes a lot of sense. If he's really confident like that and they've got it for the next decade, you'll never get the stock as cheap as it is right now. This is like a once in a decade experience here. And so now, if you're at all unconfident, you don't do a buyback like that. It's too risky because you might need that capital to buy out other companies and do this and do that. But if he's like, dude, Agent Force is going to become massive. We're on our way to becoming, a $60 billion plus run rate company per year. And then we're going to $100 billion after that. Do the buyback now because you'll never get the stock as cheap as you're getting it this year, essentially, right? As far as the income statement went, I gave him a C grade overall. Total revenues, 12% growth year over year. Cost of revenues up 13%. This is one of those things that's going to make it's going to make Wall Street uncomfortable. When they see revenue up 12% and cost of revenue up 13%, even though revenue is a way bigger line item, right? So gross profit was up 12% for the company year over year to almost $8.7 billion from $7.7 billion the same quarter last year. R&D was up 14%, sales and marketing up 16%, G&A was up 18%. Those are no things you want to see because revenue is basically being outstripped on a percentage growth basis. Restructuring was down for the company year over year. Total operating expenses grew 15%. Not what you want to see when your gross profit's up 12%, right? So overall income from operations went to $1.869 billion from $1.82 billion, only 3% growth year over year. That's why I gave him a C grade here because of that part of the income statement. That's not good, right? Expenses too high. A lot of that's probably in regards to Informatica acquisition there, so do keep that in mind. They had this gain on strategic investments, which we spoke about before, the Anthropic deal of $811 million. So income before income taxes up 32% for the company year over year. Net income up 13%, diluted EPS up 18%. So the Anthropic situation kind of saved them in regards to their bottom line. Because if you just look at the raw numbers, you're like, okay, revenue up 12%, diluted EPS up 18%. Bravo. Banger, baby. But you dig a little deeper and you're like, oh, no, their expenses were really high here in the quarter and income from operations only up 3% despite revenue up being up 12%. No bueno. So my thing with Salesforce is I have full belief Benioff knows what he's doing here, right? I need to keep adding to this position. It's about a $191,000 position. I need to keep adding to this position throughout March. And I need to be in a place where I feel comfortable being fully built out in Salesforce. And I need to have that by the end of March, essentially, right? That doesn't mean I'm done buying Salesforce after that across my portfolios, but I need to add as aggressively as I possibly can here, right? I'm trying to buy as many shares as I can while the company's also buying as many shares as they can, right? And I'm very confident Salesforce has a future on lock and Benioff knows what he's doing here, right? And so I'm going to keep adding. It's a situation where we got muddy water here, right? And I'm like, I think there's gold in there. I think there's gold in there. And everybody's like, oh, it's muddy. It might be a piranha in there. It might be an alligator in there. I don't know. It looks scary, right? And that's Salesforce right now. And I get it, right? But I think there's gold in there. And time will tell, right? Time will tell. That's the fun thing with the stock market. Time always tells. Snowflake, next one up here. So Snowflake, this is a D minus. Income statement here, revenue $1.28 billion versus $986 million same quarter last year. Cost of revenue up to $426 million from $333. And gross profit went very nice to $857 million from $653. So that's impressive. They got still spending problems like crazy. Their operating loss ended up being $318 million. I mean, gosh, their spending is just ridiculous. Gross profit, $857 million. And yet you still find a way to have an operating loss of $318 million. They just continue to have spending problems at this company. It's like I tell you guys, you got to have more income than expenses. What's the number one key to being a successful investor in the market? It's not balance sheets. It's not income statements. It's not cash flows. It's not P ratios. It's having more income than expenses. So then you're always in a position to buy every week or every month, right? Same thing with a company. And so you look at a company like Salesforce, like Snowflake, they bring in so much money, so much gross profit. And yet by the end of the pie, you get to the end, there's nothing left. And they end up taking a huge loss. And it's like, dude, man, so that's Snowflake for you. It's kind of been the story for Snowflake. It has been the story for Snowflake basically ever since they went public. It remains a story. I might get interested in the stock at some point in time, but gosh, I got to see them at least get close to profitability. They're a mile and a half away, right? Next up here, Trade Desk. This stock's getting slaughtered. People are wondering, is this a great opportunity? What's going on here with Trade Desk, TTT? Well, I rated them an A- income statement. It's actually very good. Very good income statement for the company. Revenue went to $846 million from $741. Platform operations up to $163 million versus $135. That's the only kind of reddish thing there. Sales and marketing $173 versus $150. We'll keep that. Technology and development $130 versus $127. That's very impressive considering how much revenue grew, right? G&A actually fell for the company year over year, despite revenue going up $100 million plus year over year. So as far as G&A, $122 million versus $131 million in the same quarter last year. Total operating expenses went to $589 million from $545. That's not bad. We got a situation here where the revenue's up, $100 million plus, right? What, $105 million revenue's up? And meanwhile, total operating expenses is only up, what is that, $54 million? It's nothing. Income from operations, $256 million versus $195 in the same quarter last year. Income before income taxes, $270 versus $221. Now, they got killed on income taxes. Income taxes wrecked them in this quarter. They took an $83 million hit in income taxes versus $39 million in the same quarter last year, okay? So that made their net income growth and EPS growth not look that impressive, but it's because income taxes just screwed them in this quarter versus last year. But net income $186 million versus $182 in the same quarter last year. Diluted EPS 39 cents versus 36 cents. So I'm going to give them a pass on the income tax situation. So I gave him an A- grade here. Very good, very good numbers. But the scary thing, look at the revenue increase year over year. Okay, they were at 22% in the same quarter last year, and look at the new number. New number is only 14%. That's scary. That's 800 basis points less of revenue growth. No bueno. No bueno. Now, net income margin also fell for the company significantly year over year, which is also scary if you don't dive into the income statement, which not everybody does, right? So it fell to 22% from 25%. But once again, that's because of that huge income tax situation there. This is the scarier part about, oh, crap. The revenue growth went from 22% this time last year down to 14%. So then people are extrapolating future growth. And they start thinking, okay, where are we at this time next year in this quarter? What do we have? 9% revenue growth? 7% revenue growth? That starts really freaking people out because then they start thinking about the next year and okay, what are we at then? 3%? 1%? Revenue starts going down for the company? I understand it. However, on a good front, some good news for the company. Customer retention remained over 95% during the year. It's good, as it has for the past 12 consecutive quarters. Good news for the company overall when it comes to that, right? No. Also, the company is buying back shares like a madman. The company used approximately $423 million in cash to repurchase its common stock in the fourth quarter of 2025. The company used approximately $1.4 billion of cash to repurchase stock. At an average price, oh no, average price of $52.60. The stock today is $20. Oh, if they just waited, right? If they just waited, they way overpaid. Oh no. The company has approximately $150 million left for repurchase. So, the good news is they're buying for cheap, right? Still, but it's just gosh, they blew so much money in the 50s. And it's you could have bought it in the 20s today. That money would have went so much further, right? But this is a stock that was $90 back in August. It's been a brutal stock. It has my interest. I'm going to do more digging here. I'll likely listen to a conference call. I'm going to do more digging on their business model, how bad it's being disrupted in this whole AI wave. And you might hear more from me in the future about Trade Desk, but right now, we'll see. C3AI. Then we get an honest and then a great hidden small cap. Okay. C3AI. No bueno. No bueno. Their revenue went from $98 million down to $53 million. Their gross profit went from $58 million down to $9 million. I had to do a double take on these numbers. I'm like, wait. Is that accurate? I had to do a double, triple take. I'm like, no, wait, what? Is it that bad at C3AI? Oh my gosh. Net loss, $133 million for the company in this latest quarter versus $80 million loss in the same quarter last year. Diluted, lost 94 cents versus 62 cents. Guys, this is so bad. It's to the point where with C3 AI, where you start worrying about, is this company end up going bankrupt? Literally, that's what you start worrying about. It's a mess. I don't know what's the fix here. I guess just no one wants their product, but they're spending like drunken. I mean, this might be the most poorly run company in the whole stock market. I'm not kidding. This is awful, ladies and gentlemen. There's a good example of arguably one of the best income statements you'll ever see in history. I just showed you it in this video with that NVIDIA report, right? And now I'm showing you one of the worst income statements you'll ever see in your life. This is awful, ladies and gentlemen. Think about this for a moment. They lost over double the amount on the bottom line that they had come in on the top line. Almost over double the amount. How's that even possible? Oh my gosh, ladies and gentlemen. And this is why there's a big difference between getting it right and getting it wrong when you're an individual stock picker, and why it's worth putting in the work to understand these companies, right? This is the same company that got put into the same sentence as Palantir years ago. They thought like they were the same type of company, right? And look at Palantir's given a return of 1,700%. I've taken disgusting amount of gains in Palantir stock over the past year, right? So many profits, it's incredible. Thank you, Palantir, for that, right? Thank goodness I picked Palantir instead of C3 AI, because if I picked C3 AI, I'd be looking on unbelievable losses right now in a situation where I'm not sure the company's even going to be solvent a few years from now. At the rate they're going, I'm not sure. With a Palantir, I'm like, okay, valuation's super high, but I got to take insane profits and I still get to hold some shares, and the company's a banger. So man, you gotta do the work when it comes to these companies, because woo, there's a big, Palantir's been a life-changing stock if you've owned this stock over the last 3 or 4 years. Life-changing. And C3 AI, if you've been heavily invested in that, has also been a life-changing stock, but for the negative, right? If you put 20% of your net worth in C3 AI 3 or 4 years ago, you don't have much to show. You put 20% of your net worth in Palantir 3 or 4 years ago, you're likely probably a millionaire or multimillionaire now. It's just such a difference, right? And these two companies, I understand not everybody's been around a while. Like some of you guys watching this, you might only be in the market the first year or two. If you were around in the market, and I know people, let me know in the comments if you were around back in 2021, 2022, 2023, you guys remember when Palantir and C3 AI were put in the same, they thought these were very similar companies, and they thought they were going to do well together or bad together. Remember that? Gosh, could that have been further from the truth, right? All right, next one up here, $2 Chuck Honest, and then we'll get in a great hidden small cap. So when it comes to Honest here, so if you've been following the Honest story, we all knew that they're basically going to get out of a bunch of product categories that have been, let's call it bad product categories, things that add revenue to the company but end up hurting margins, hurting profitability, and to be quite frank, take focus away from the company. And so Carla announced this last quarter, and investors hated it because they're like, oh my gosh, this means, next year's numbers are all going to be screwed up, meaning 2026 numbers, right? They're going to be all screwed up because they're getting out of these business lines, and it's going to screw up their revenue in the short term, make their revenue look bad and their margins look bad and all those sorts of things. As a long-term investor, I want a company always to make the best long-term decision for the shareholders. And since Carla came in at this company, she took this company from a near bankrupt, they were on their way to bankruptcy. I'm just going to be completely honest, okay? And she now has this company in a great position where the balance sheet's loaded with cash to the sky. She's increased their margins dramatically, and she's made some very tough decisions around headcount, around getting out of certain business lines and things like that, it makes your revenue look bigger, but at the end of the day, it's hurting your company overall. And I think it's a right decision. And so I'm fully back her in regards to this situation, right? So revenue decreased about 12% year over year because they got out of these business lines, right? Organic revenue, however, was up for the company on a year over year basis, okay? So that organic revenue basically just meaning businesses they're staying into, right? Track channel consumption for the company grew 3.4% compared to comparative categories, which were up 2.5% in the period. So they're outgrowing categories. That's good. Gross margin came in at 15.7% compared to 38.8% in the same quarter last year. The decline was primarily driven by the discrete inventory write-down on apparel and fixed asset impairments related to the strategic exits of, Honest, obviously, categories they're out of. So that's like a one-off type situation here in regards to screw up of their margins, right? Now, the company's sitting on a shocking number of cash now. This company has almost $90 million in cash and cash equivalents with no debt outstanding. Listen, ladies and gentlemen, Honest is a $200-ish million market cap. Somewhere in the 200 range. I don't know. I can't remember exactly where it's at. It might be at 225, 250, 275. It's in the 200 range, okay? And almost $90 million in cash sitting around. It's a shocking amount. I mean, to put this in reference, this would be like NVIDIA being trading at a $5 trillion market cap and having $2 trillion of cash sitting on the balance sheet. They'd just be like, what? They got $2 trillion of cash sitting on the balance sheet? That's what we're talking about here with Honest. This is insane, right? So they announced basically they want to do a huge share buyback, which I applaud that, right? No, as far as the 2026 outlook, this is actually a good outlook. Very, very good. This makes me very optimistic about Honest. As previously disclosed, the company's long-term financial algorithm consists of revenue growth of 4 to 6%, right? So they're talking about revenue 306 mil to 312 mil here, right? Organic revenue growth of 4 to 6%. So that's businesses they're staying into, not the ones they're exiting, right? Because obviously if you're going to exit a bunch of businesses, your revenue is going to be down year over year. But the businesses are focused on, the ones they're not getting out of 4 to 6% revenue growth. Look at the adjusted gross margins here. Talking about low 40s. We're taking the adjusted gross margins to low 40s. Okay. Adjusted EBITDA, $20 to $23 million range. Once again, Honest's market cap's in the $200 million range right now. So crazy numbers, right? Whew. Yeah. So as far as their income statement, I had to give them an F grade, but it's really just around these business exits and these one-offs and how it's killing profitability and margins in the short term. But a lot of it's like kind of more non-cash expenses, right? And so like it is what it is. Like their income statements are going to be messy here in the short term for the next few quarters. But like, if you have a long-term vision, you're running your numbers, it's like, this is the best thing ever for the company, right? So here's the deal. I'm a buyer of Honest, and I'm going to listen to the conference call on 1000xstocks.com tonight. We do have the live 1000x feature now to listen to conference calls live. I haven't gotten a chance to listen to it yet. I'm going to listen to it tonight. As long as everything checks out, I'm a buyer of Honest, okay? I'll probably be a heavy buyer, actually. I'm more confident in the company than ever. If that conference call is good, I'll load up. We'll own the whole company, Honest and me, okay? So, great hidden stock, a banger stock. Let me show you what it is. This company right here, it's my 5th best percentage gainer in the public account. 5th best. And this might shock people because it's beating companies like Amazon, which is at a 50% gain for me. It's beating companies like Cheesecake at a 61% gain for me. It's beating companies like Estee Lauder at a 62% gain. It's beating even great AMD at 88%. It's beating Google McDougal, which is at about 100% gain, and it's even beaten Celsius, which is about 107% gain. It's my 5th best percentage gainer. Oh my gosh, I have lots of bangers. It's Revolve, RVLV, sitting on 118% gain on this stock. RVLV came out with earnings yesterday. They reported a grade A income statement. Net sales, 324 mil from 293. This is an e-commerce company, sells apparel, very big with millennials, but even looks like they're going to be even bigger with Gen Z females, okay? Cost of sales, 151 mil versus 139 mil. Gross profit went to about $173 million versus 154 in the same quarter last year. They kept fulfillment, selling, distribution, marketing, G&A, all in check. So income from operations exploded for the company year over year. They did over $20 million income from operations in the quarter versus $11 million in the same quarter last year. Net income went to $18 million from $11 million. Diluted EPS went to 26 cents from 17 cents. For Revolve, I haven't got a chance to listen to our conference call. I'll listen to that tonight after Honest call. And Blair posted this in the private stock group's Discord chat, right? He said, early 2026 momentum was strong. Net sales up about 16% for the first 7 weeks. That's impressive. In retail, in clothing retail, 16% growth? Even the last quarter was what, double digit, low double digit growth? Like, Banger. So Revolve, no one talks about it. It's like, literally, I don't think anybody in the world talks about the stock other than me. And it's funny, in the Discord chat, we got 3,000 plus members in the private stock group's Discord chat. I think the only two people that post in that entire Revolve chat, because we have like chats for all the different stocks, and obviously like AMD and Palantir and stocks like that are always super busy, right? But like in terms of the Revolve chat, I think it's just Blair and me like post stuff in there, and like no one else, because no one cares about the stock and no one pays attention. And I'm like, dude, I think this is another company people should pay attention to. I understand a lot of people in the stock market, like it's like 90% male. My audience is probably 90% male, only about 10% female. I think I might be up to 12% female. Shout out to the females out there. Hello, okay? But when it comes to Revolve, like a lot of people are like, I don't get it. Like they sell dresses and expensive clothes and like purses and handbags, and they started getting a beauty care. And I don't know, man. Think you might want to do some research on this one. You might want to do a little research on Revolve. That's all I'll say about that, because they are back. Ladies and gentlemen, we have a lot of earnings going on. We have a lot of craziness. Stay focused on the long term. Make sure your company's trajectories are where you want them to see them over the long term, and not just focused on the short-term stock prices. For noobs in the market, they get focused on the short-term stock price move. For people that are experienced, people like myself have been in this game 17 years, we focus on what's actually going on with the businesses, the fundamentals, the financials, the conference calls, the stuff you need to be focused on. If you want to take your investing up to a much higher level than where you're at right now, join my private stock group, apply to join it, pin comment down there, click on that, fill the form, we'll see if we can get you access in there. All my course curriculums, private Discord chat, exclusive weekly videos, all that good stuff. Much love and have a great day.